This is Vicky from SmartFX. I would like to welcome you all in this webinar. And also you can follow us in YouTube, Instagram. All right, let's get started. So today I'm going to cover a very important data, which is called NFP. All right, so first of all, what we're going to do is we will understand what exactly the NFP is, the full form of NFP. So full form of NFP is non-farm payroll reports. All right, but its actual name is employment situation. However, the famous name amongst the traders and investors is non-farm payroll. All right, let's dive right into it. Okay, so the table of content gonna be all these things. The first of all is the introduction to non-farm payroll, and second is importance of NFP, and third one is components of the NFP report. The fourth is how NFP affects financial markets, and fifth is case studies and examples, and sixth is strategies for trading NFP. All right. Okay, so the introduction to the non-farm payroll, NFP. So definition of NFP, the non-farm payroll report is a monthly economic indicator released by the US Bureau of Labor Statistics, providing insights into the overall health of the labor market by tracking changes in the employment levels across all non-farm sectors, excluding farm workers, private household employees, non-profit employees, and actively serving military. NFP is a key indicator of economic health and employment trends. So let me explain this briefly, what exactly it is. So basically, NFP is the most important economic data released in the world that is watched by the everyone in the world. All right. So NFP data actually shows number of the jobs added or taken away from the economy in the previous month. Okay, and for example, you can find in a forex factory. Those who are familiar with the forex factory, there the data actually they release the data there. So if the actual release is greater than the forecast, the economic is doing well. In contrary, if the actual release is lesser than forecast, then economic is not doing well. All right. And also, NFP is excluding farm workers, private household employees, and non-profit employees, and actively serving military. I'm going to explain this later, so that we'll have better understanding of it. Right. So let's get to the next point, that is importance of the NFP report. All right. So significance as a leading economic indicator. NFP is closely watched by the economics, policy makers, and investors due to its ability to gauge the strength of the US economy and inform monetary policy decisions. Second, influence on monetary policies. Okay, so let me explain you this in briefly what exactly it is. So NFP data, for example, let's say if the NFP data is positive, it means the US economy is showing strength. All right, that means US economy and US dollar is going to be stronger and will grow. Therefore, it will attract more investment from within the country and outside the country. So thus the value of the dollar goes up. However, if it's a negative data, if the in data shows negative, that means the economy is shrinking. All right. And it will actually, what will happen is if the economy shrinks, the value of the dollar goes down. Therefore, the investors will move their investment away from the US economy and US dollar, and it will impact huge, tremendously to the economic of the any country, let's say, or US. So that is, and this is the reason why the NFP is economic, I mean, significantly leading economic indicator. All right. Okay. Influence on the monetary policy. The Federal Reserve considers NFP data when making decisions regarding interest rates and other monetary policy. Okay. So let me explain this as well briefly. Well, any government. I'm just, actually referring the U.S. government just because U.S. is one of the biggest economic in the world, and dollar is one of the, it's one of the, important currency in the world. Okay, so I'm going to referring, but it's applicable to every country in the world. All right. So if the government first priority is to achieve the price stability and maximum employment. All right. In fact, NFP data has direct effect on monetary policy decisions. For example, if the unemployment number are increasing, okay, there are more unemployment people in the country, then what will happen? The government, let's say, a Federal Reserve in the US, can loosen of monetary policy. Okay, so which means there will be a lower interest rate, thus a lower demand for the dollar, that the value of the dollar goes down as soon as they decrease the interest rate. And in another scenario, if there is more employment, that means the country's economy is spending, and there will be more consumer spending in the economy, and thus the economic thrives. So the government increases interest rate to avoid unnecessary inflation, thus the dollar becomes stronger. So now, for example, as of now, because of the high inflation, the Federal Reserve have actually increased the interest rate of the dollar around 5.25 to 5.50. Okay, and that's the reason the value of the dollar is going up. Because as you know, the value of the dollar goes up, like every investors in the world want to invest on dollars to get a high return on investment. That's the reason. That's exactly what happens. All right. Okay, so let's dive into the components of the NFP report. The first one is non-farm payroll employment. The headline figure representing the net change in the non-farm employment during the previous month. Okay. So the NFP actually is the number of the people. I mean, what? Let's say, let me make it a very simple way. So how many people are employed in the previous month? So they'll check every month. The government will check every month that how many people are employed in the previous month. Okay. However, there's some exceptions. For example, farmers. Earlier, farmers, because farming is a seasonal. It's okay. They hire more people at some point of time, like harvesting. Okay, but there is farmers are not required throughout the year. And active serving military, the government will not hire every month because they are hired, like they have certain period of time where they have to serve the military. All right, households. So and government employees. So these are the exceptions. All right. And we'll come down to the unemployment rate. The percentage of the labor force that is unemployed and actively seeking employment. So unemployment rate is where they will check that how many people have actually uh, went out of the job. If there are more unemployment in a country, that means it's a sign of the slowing economy. And as you know that when there is less unemployment, people don't have money at their disposal to invest or spend, and that's the reason the country, economy shrinks, and that's the particular country's money goes down, the value of money goes down. So unemployment rate is also a very, very significant. All right. And third one is the average hourly earnings. The average hourly wages for all non-farm workers, providing insights into the wage growth trends. Okay, so I'm gonna explain about this briefly as well. See, because whatever I'm covering, these uh, these points are really, really important. All right, because in particular day, all of this will release in the same time, and because of this data, the market moves tremendously. You cannot imagine, the volatility of the market as that particular day. So there's a reason I'm actually explaining you so that you can actually comprehend and also apply in while before, or be careful when you before trading, or do a strategy at the time of trading. So average hourly earnings, let me explain you briefly. Okay, so average hourly earnings, which means in a situation where job is added. Okay, let's say job is added, but if uh, if the average hourly earnings are falling, they are getting paid less, that indicates economy is not doing good the way it sounds. However, it might sound that okay, employment, like there are people are more employed in the previous month, they have given more work. However, the hourly earnings payment is lesser. That means it is not good at all. There might be more people at work by number, but if their earnings are less, that is equal to lower jobs. Okay, which means like if in paper, if you get like you know um like more people are employed, they are at work. However, if they are paid less, but they don't less, that means they don't have that capacity to invest or spend money in the economy, and thus this economy shrinks. Okay, so this is the reason why average hourly earnings is important. If they pay more, they can actually spend more, they can contribute to the economy. Okay, I hope everything is clear so far. All right, so next is labor force participation rate, the percentage of the population that is either employed or actively seeking employment, reflecting broader labor market dynamics. So it's very simple. Let's proceed towards the next. Okay, so now let us see when NFP releases. So NFP release schedule is frequency is NFP report is released on the first Friday of each month. Okay, and timing typically released at 8:30 a.m. Eastern time, or if you want to talk about UA time, is 4:30 p.m. Okay, and what it will be the market reaction? The market reaction, immediate volatility in the financial markets upon release due to the significant impact of NAP data on investors' sentiment. As soon as the NAP data is released, you can see, you can witness a tremendous volatility in the markets going up and down like crazy. And I'm very sure who are already trading in a stock market or in a forex market, they have already came across with this volatility. Okay, it's tremendous, it's profound. And those who are beginner, you will see, and gotta be very careful at the time of data release. Anyways, let's talk about the impact of NFP on the financial markets. First, let's talk about the stock markets. NFP data can influence stock market indices such as S&P 500 and Dow Jones Industrial Average, with strong employment figures often leading to bullish market sentiment. So what that means, what is that if there is more, if the data says that the more people are hired in the previous month, that means the stock market, like indices like S&P 500, Dow Jones, NASDAQ will go up, will be in the bullish sentiment, because what happens is, at the end of the day is like when people are employed, they have more money at their disposal. They can invest on the stock market. And once they invest in the stock market, the prices of the shares goes up. Okay. So that's simple it is. And let's talk about the currency markets. The US dollar, USD, tends to strengthen following positive NFP releases, while weaker than expected data may lead to USD depreciation against other major currencies. So we spoke about stock market. Let's talk about forex. So as it's the same thing. Like, if let's say the data shows positive that more people are employed in the previous month, that means people will have more money at their disposal and they can actually invest and spend in the goods and services. All right. And what happens is they invest in the economy will expand. And when economy will expand, the value of that country currency goes up. Okay. So that's exactly what happens. However, in contrary, if the data comes negative, if there then there are more people are like less people are employed. All right. That means what happens is they don't people are don't have any job, and that means they don't have any money at their disposal, and they can't invest or spend money on the in the economy, and thus is economy contracts, it shrinks, and thus the currency of the country goes down. Okay, so it's as simple it is. All right, so NFP data and its impact on the market. So let's see. Okay, so now you can see this. You can find this, page or in a forexfactory.com. The people who are trading already knows the importance of this website. So as I spoke to you, I already explained to you about average hourly earnings month over month. I also explained to you about non-farm employment chains. I also explained to you about unemployment rate. Okay, so these are very, very, very significant data release. Okay, so yeah, hello everybody, be cautious. It's NFP. All right. Okay, first of all, advice for traders. This is very, very important advice for all my fellow traders. So it is advisable for traders not to hold short-term position at a time of NFP release, because the market will be very volatile. There will be high chances of blowing account. If a trader has a small capital or had a or had opened a bigger positions. I'm talking about specifically, as soon as within a couple of minutes or seconds when the market, the data releases, there will be high volatility in the market. And especially for the beginners who has a very small capital, okay, or for the traders who don't follow the risk management, they do not put the stop loss, it's very important for them not to trade in this kind of data. They can trade after, 5 to 10 minutes later, but only applying the proper risk management. Okay. Because if you do not follow the risk management, what will happen is there will be the huge movement, all right, and your account might get stopped off. It can blow up. Or those who have a very small capital, definitely. So it is advisable for like beginners or people who don't follow the risk management not to trade, and the huge lots, especially with the bigger positions. So one has to be very, very careful because after all, trading is a profession, it's a skill. It's not a gambling, and one has to be very, very careful. Okay, let's get back to the. Okay, so however, if a trader has a long-term position for weeks or months, okay, trader can feel free to hold because eventually the market is going to adjust back to the normal way it was moving before, because it's going to be a small fluctuation in the short term. So this is for the people who does a swing trading, who holds their positions for weeks or months. They can feel free to hold this because see, NEP data will impact the market for a short span of time. There will be huge volatility for the certain portion of time, but so it's not gonna impact to the swing traders who has opened like position for weeks or months, not that much as a day trader or scalper. Okay, so for the swing traders whose positions open for weeks and months, they can actually live it because eventually the market will come back to their own position on their previous place. But do not forget, NEP NFP release can change itself the way your analysis looks. So trader should revisit their analysis and decide the holding of the long term is the right thing to do after the release of NFP. So this is a very important part. For the swing traders, it's advisable to actually revisit your analysis, your strategy after the NFP release, because things might get different after the NFP release. All right. The market sentiment can change. The psychology of traders, investor can change. Okay. So this NFP can have a long-term impact as well. So those are holding our position for long term for swing traders. I do recommend them to just go and revisit their analysis. Okay. Check their strategies and make an informed decision whether to hold that for a long term or not. It's better, like it's okay that you can actually hold this for the long term. So you need to do like due diligence and accordingly act upon it. All right. So far so good. I hope everyone is taking notes, especially to the beginners. I would highly encourage you to take notes because this is a very important data. Okay. All right. Anyways, so let's look at the real life scenario of the market after the NFP data release. All right. So we're gonna look how actually market behaves after the NFP data. Okay, so actually this NFP report of is 5 April of 2024. Okay, it's XAU USD gold versus dollar. It's a 5-minute chart. You can see during that moment the NFP was positive, and look at what happened to gold, because as you know the gold and the dollar, they are inversely proportional. They're inverse relationship. Okay, if the gold goes up, the dollar goes down. If the dollar goes up, the gold goes down. So at during that point of time, the NFP data was in favor of dollars, because there was positive, more employment was, I mean, there was more employment. So definitely the US dollar will go up and gold went down. So you can see the red candle, the a big, huge, gigantic red candle going down. It actually, it's in a 5 minute, it went up to $17, 17 $17. So imagine how crazy this, how insane this data is. For example, if you are holding one lot, that means it's $1,700 you're gonna lose in one lot. Okay. Now it's a dollar index. See the same day, chart. Dollar went up. Um, yep, you can see this dollar index. It's actually dollar index. It went up by 4 pips. See, this is what exactly happened. Inversely proportional. Okay, let's see another one is Euro USD. Same date, NFP data release, around 43 pips. 43 pips I'm talking about. Not 14, not 15, it's 43 pips. So this is something you get to witness during the NFP. And some people make good amount of money, and some people lose great amount of money. So it's up to you which part you want to be. But I would not encourage you, as earlier I explained, not to be there if you have a small capital, or if you don't follow the risk management, because this can stop out your account. It can blow out your account, and that will leave a very negative impression in your trading psychology. Okay. All right. So we have already seen and I mean all the consequences, or we have seen the real market. We have understood what NFP is and how powerful data is. So let's continue further. Let's talk about the trading strategies for NFP. So how we gonna, uh, you know, we're gonna have what kind of strategies we should have in order to trade during the time of NFP, non-farm payroll. Okay, so it's a pre-NFP analysis. Let's talk about this. Conduct thorough research and analysis to forecast NFP outcomes. Considering leading indicators such as ADP employment report, initial jobless claims, ISM manufacturing and non-manufacturing PMI. Okay, this is very, very important point. I'm gonna try to explain briefly all about this data, because they themselves carry, tremendous power, or let's say they also have the ability to impact or move the market tremendously. Okay, so let's say tomorrow is NFP, or after like 5 hours, 6 hours, there's an NFP. So it's a pre-NFP. What you need to analyze is you need to do a thorough research and analyze and also about these indicators like leading indicators like ADP employment report, initial jobless claims, and PMI. All right, and try to forecast the outcomes. Okay, no one in trading, we can't guarantee anything. We can have a high probability, but we can't guarantee. So by understanding all these like leading indicators, you can actually have a good insight. You can understand, you can comprehend that okay, you still will have that you know understanding, okay, the market might go this direction because of this report. So let me quickly cover all of this. What exactly is ADP employment report is, initial jobless claims is, and ISM manufacturing and non-manufacturing PMI is. Okay. And ADP employment report means automatic data processing. The ADP full form is automatic data processing employment report. Okay, so it's similar to the NFP non-farm payroll, but it's bit. Let me explain you what it is. It actually releases on Wednesday. All right. It releases on Wednesday, and in a report is actual greater than forecast is good for economy and a dollar. Report is actual report is greater than the forecast. It's good for the economy and a dollar. So ADP employment report actually is a private firm which analyzes payroll data more than 25 million workers. Okay, so they actually analyze the data of the more than 25 million workers, or around 20%. So NFP is about 80%. Okay, I hope you understood about ADP employment report. And second one is initial jobless claims. You also can see this data in Forex Factory. Um, so initial jobless claims, where what they do is they check how many people, all right, how many people going for the unemployment for the very first time. Very first time. How many people actually, is out of the work. So the bottom line is, so sorry. Okay, so bottom line is initial jobless claims. If that happens is, for example, is on the rise, that means it's a negative signal for the economy. Okay, if it's in the rise, that means it is negative signal for the economy. Okay, and now let's talk about briefly about ISM, manufacturing and non-manufacturing. PMI is purchasing manager index, one of the another significant data. Okay, it is actually one of the reliable indicator. Okay, and based on the services and manufacturing. So what happens is, if the in PMI, what they do is the government will ask 300 managers. Okay, they ask 300 managers about the label conditions of the, like let's say level of the business conditions. They go to more than 300 managers and they inquire like what's happening in the business. All right. For example, like they will check like how many new orders are there. They'll check the prices of those products and services and how many people are employed in that particular organization. And also they will check the production output, okay, whether they are above or below the previous month. For example, if the data shows that it's above 50, that means the industry is expanding. However, if it shows it's below 50, which means the economy is contracting. All right, so it's above 50, that means it's good for the dollar, or any other country who's actually checking the PMI. It's up below 50, that means it's bad for the dollar. The economic shrinking, the dollar will go down. So these indicators, these data, you can actually research about this thing before before NFP. And if you find all of this in a positive thing, that means NFP uh, gonna be on a positive side, because uh, this indicators like ADP, initial jobless claims, or PMI will give you information that like how economic is doing. All right, and based on that, you can actually predict the outcomes of the market. Okay. Okay, so that was analysis NFP. Now let's talk about the trading news. You can also okay, implement trading strategies to capitalize on immediate market reactions following the release of NFP data, including breakout trading, fade trading, and volatility plays. So as I already told you, and you don't have to be there immediately in the market, like 1-2 seconds. But with, when they actually release the date news about the NFP, and accordingly you can trade later, like half an hour later or 1 hour later, because market will definitely react. Example like breakout trading, fade trading. All right, because see, there will be a huge volatility in the market as soon as the data release. It goes up and down. All right, we never know what has happened, but eventually, after an hour, 2 hours, or let's say like half an hour later, the market will go to the direction where it's supposed to go according to the report. Okay, if the NFP is positive, you can sell dollar, euro, USD, and put the money in euro, and buy euro dollar index. That's exactly it is. So eventually, there will be profit, or the outcome will be according to your expectations. Okay. All right, so let's come down to the risk management. As I already explained you earlier, how important is risk management. Employ risk management techniques such as setting stop loss orders and position sizing to mitigate potential losses in the volatile market conditions. As I already explained you earlier, that risk management is a king. Okay, if you really, really want to be in this market, if you want to sustain in this market, you need to have a risk management. Okay, it will help you to go for a long term, like running a marathon. But if you're looking for a short term, make want to make money done, or if you want to lose your money, risk management, it's better. What happens is when you don't use a risk management, there is a high chances of blowing account, losing a tremendous amount of money, and eventually you will give up trading. But if you apply the proper risk management, there will be a minimum losses and maximum profits, and you can go for a long term. As you know that what happens when you go long term, like 10% of the people are successful in this industry, but they make more than CEOs, doctors, engineers, anybody in the world. The earning potential for the people who understand this market is limitless. Okay, so never ever open a position without risk management. Always put stop loss order, all right, so that your losses will be minimal. Okay, Guys, so let's see when is the next NFP, all right? So here we go. The next NFP is on June 7th. And you can see that, let's remove this one sec. Okay, so you can see that there in the 4:30 p.m. there's a average hourly earnings month over month report, non-farm employment change report, and unemployment rate report. So I've covered all of this in detail, and also also told you that how these important data can impact the market. Okay, it is as important as in understanding the technical analysis. Okay, um, you might be an expert in price action or might be expert in indicators, but if you don't know all about this data release and all this during the time of data release, your price action will not work the way it works. Okay, so it is very, very important. You need to put into the consideration that you know you have to understand this thing when data is going to release NFP, CPI, FOMC meeting. All of this very, very important. It's as important as learning how to trade or understanding how to read a chart patterns, everything. So yeah. Anyways, one sec. Okay, so I actually have covered most of the things, and I really, really appreciate it uh, for all the people who are participating in this webinar. And hopefully, you have, you understood the importance of NFP data, and also jot down very important, points. So if you have any questions, queries, you can contact us in our Instagram page or in our YouTube. Feel free about that and try to, reach you as soon as possible. All right. And so that's all. Thank you very much all for participating, and I'll see you soon in the next webinar. Have a wonderful evening. Bye for now.